All right. Thanks very much, both Sameepa and Ruth, for getting us that perspective. Now, let's go across to our panel of experts. Bharat and Pranay, I couldn't but help notice you all smile several times during those two stories. What's really going on? Let me come to you first. I mean, you have a situation where sales are not doing well, prices haven't come off, yet stocks are on fire. What's really happening?
Okay, you want a one-word answer?
Yes.
Everybody is confused.
Confused. Including
the buyer is confused because he's expecting the prices to go down. The developer is confused because the regulations keep on changing and he doesn't know where he stands, particularly the SEZ and those kind of regulations. The lender is confused because he knows that even by reduction of price, the developers are not able to jack up their sales. So, I mean, everyone, all the stakeholders in the industry are quite confused as to what is happening, where is it going, and where will it go in 2012 compared to 2011. I think that's where we stand.
Bharat, this is one sector where it's always been who blinks first, right? I mean, we always hear about the fact, or rather, we've heard about this fact for the last 2 years now. Lending has, become far more tighter. Raising money from a real estate company's point of view has become far more difficult. Interest rates on a consumer have only increased. Yet, most developers seem to have held on to rates or prices. In that backdrop, do you see a situation at all where, we just heard the fact that sales are at 3-year lows as far as even Mumbai is concerned, but prices aren't coming off? What is the market getting so bullish about?
I mean, frankly, if you really ask me on the stock exchange side, stock market side, I don't want to comment on that because stock markets have always defied all kinds of logics.
So when you say don't want to comment,
I mean,
it
I don't
means
understand.
that you don't understand.
I don't understand also, and
That's
I don't want to comment
also. You can't justify it. Let's put it that way.
Even the sharp fall was also not justified, and even this kind of a sharp recovery. I mean, that is what we had seen in 2008-9. Within 6 months,
that's an important point you're making. You're saying even the fall was not justified.
No, even in the 2000s, if you really look at it, the sharp recovery of 2009, ideally that recovery, according to me, was unwarranted and it is not there. It was just on the backdrop of a lot of money chasing, a lot of projects, etc. That is why the prices had gone up. Same way for the stock market recovery. Because it's just demand and supply and funds, funding. If, a lot of, and Indian stock markets, the depth is very low. We don't have the kind of depth which you see overseas markets. So this is just a case of, just 5 billion, 10 billion FII funds coming in and just ramping up. And this, historically, if you look at it, the real estate and the construction industry would only lead to the recovery of the economy because it supports so many industries, steel, cement, labor, a lot of ancillaries, etc. So that is the only way. You get in at a good price, decent price, and wait for it to appreciate. According to me, the India story is still intact, though there are a lot of blips, 2G and this and that. A lot of things are happening, but overall, according to me, over a period of time, this is going to lead to a lot of transparency in the way we operate, both in the economy as well as in the sector. So the foreign players and the investors would definitely feel more comfortable than what they are now, even though, a lot of funds have come in the sector, even though a lot of opaqueness was there in the way things were happening. So from now on, according to me, it can only be upward trend. Though next 6 to 12 months would determine the pace at which it can happen.
Okay. Let me get a stock market view here. Param, you've heard both Bharat and you've heard Pranay as well outlining what they think is really going on the ground. But from a market point of view, how would you explain the sudden bullishness? Because the question that I posed to them as well, your input costs have gone up, your liquidity hasn't gotten any better, you're sitting on assets while some players have been able to flog them off to repay their debt, but that still remains a very small part of the overall debt issue. You've just heard some of the statistics, which of course you would be tracking far more closely. It's not as if they've delivered great results, but yet there seems to be a sense of bullishness around this sector all over again in the market.
See, we are not gung-ho about the current rally. If you see the BSE Reactor Index has broadly underperformed the broader indices over the last 1 year, and we expect that trend to continue in the medium term. And the key reason is basically the weak demand, as well as the basically debt is the major overhang on the sector. If you see, most of the companies are behind the schedule of the debt reduction plan. Whatever cash flow they are generating from the core operations are basically going out for the interest repayment and the capex. So basically the debt reduction is not happening on the ground what we are anticipating. Plus, if you see the third quarter, in spite of the festive season, new launches has remained pretty much subdued across all the companies. The prices have remained firm. They are not going down as such. So we believe the Q4 being the last financial year, the RBI has been very cautious to lend the money to the real estate sector. So it would be interesting to see whether they would be rolling over the debt for these companies. Because if the rollover doesn't happen for most of these developers, then we might see the prices coming down. And it will be overall good for the sector per se, as the volume recovery will happen, which seems to be quite muted as of now. So we are not so gung-ho about the current rally, and we believe one will get a good entry point at this counter.